Hey guys, what's up? Welcome back to another live stream. Are we live here? Let me see. Can you guys see me or hear me? Joshua, what's up, bro? How are you? Lisa. There you go. There I am. Super tired, guys. You know that I do live stream for the members of my Patreon throughout the whole trading session. So today I streamed already for something like 7 hours and 30 minutes or so. Super tired, but here I am. I am going to make an extra effort in order to ask your questions, in order to talk about the markets and go over some stocks. So welcome back to another live stream. I am Granny. Lisa, there you go. All right. Nicholas Watkins. What's up, guys? How was your trading session today? Did you kill it? Did you see the SPY finding support at 426? I called it out earlier on today. Let me see the posts. Let me see the stuff that I posted in my channel, guys. Let me see. Here I have my channel. So I said here, yeah, watch out for 426.75, guys. If the bulls recapture the area, that opens for 427.30. And they did hold 426.75. And I was actually able to take a day trade based on that analysis. I missed that one. Yep. There you guys can see my call out. This is what I am doing as of now, guys. I am pretty much posting very specific stuff about the SPY throughout the trading session. And sometimes, more often than not, I would say I am also calling out some stocks. So today I also told you guys about Coinbase, which fell off a cliff on news about the Securities and Exchange Commission. Okay, guys, let me know. Drop a comment down below. What stocks do you guys want me to go over? And in the meantime, let me tell you, you guys already know what happened in today's trading session, but I want to share some thoughts with you guys about what is going on as of now in the market. So, green day across the board. The Russell 2000 was the best performing index today, goes up 2.69%. The NASDAQ went up 0.36%. The Dow Jones pretty much closed flat. It went up 0.03%. And the S&P 500 went up 0.24%. I know that you guys are not really familiar about the S&P 500 because you guys trade the SPY. I would suggest to you to try to get familiar with the S&P 500 or the SPX, which happens to be the cash index. That is going to allow you to understand better the SPY itself. So take a look at the closing price of the S&P 500, guys. 4,283 points. Almost, we can round it up, 4,284 points. So we have a very big fat number coming up for the S&P 500, which happens to be 4,300. So the bulls are getting closer, and that kind of fat numbers tend to act like a magnet. So not all of the gaps get filled, but in this case, guys, if I would have if I had to guess, I would say that this gap up to 4,300 is very likely to be filled sooner rather than later. I could obviously be mistaken about it, but I am going to go over the SPY in just a second, okay? Take a look at the sectors of the markets, guys. One of the let's say the strongest arguments for the bears is the fact that the breadth that we are seeing as of now in the markets is not healthy, and the bears happen to be right about that. So today, a loser year to date, which happens to be the financial sector, which by the way is a very important sector inside the S&P 500, was the one or was the sector that did the heavy lifting. The financial sector went up today 1.26%. This is positive. However, the winners year to date are still doing part of the heavy lifting. when I talk about the winners, talking about the sectors more specifically, I am talking about consumer discretionary, this sector that you guys can see over here that went up today 1.04%. X or Y. When we talk about X or Y, we are basically talking about Amazon and Tesla. And also communication services. This sector went up today 0.38%. I am talking about Google, Meta, also Netflix. Meta ended up closing in the red. If I remember correctly, I don't know what happened, or maybe we can make the case that Meta has been under pressure because of the announcement that Apple made yesterday about this VR glass or VR glasses that is going to cost $3,500. But anyhow, Meta ended up closing in the red. But if we take a look, or if we take a deeper look at the sectors, take a look at these guys. Healthcare, a very important sector, market cap-wise in the SPY or the S&P 500, went down today 0.83%. Consumer staples went down 0.50%. Utilities down 0.09%. And the tech sector, which, by the way, is the most important sector inside the S&P 500 by a long shot, closed pretty much flat, down 0.02%. When we talk about the tech sector, we are talking about semiconductors, stocks such as NVIDIA, AMD, and also about stocks such as Apple, Microsoft, and so forth. So we are not seeing a healthy rotation in the markets. And take a look at this chart that I wanted to show you. Take a look at this. Year to date, and you guys know that the S&P 500 is a cap-weighted index. So some stocks have a, let's say, heavier influence over the S&P 500 relative to other stocks depending on their market capitalization. So, and obviously, the most important stocks market cap-wise in the S&P 500 are the Microsoft of the world and the Apple of the world, or the Apples of the world, and the Teslas of the world, and so forth. Okay, get this, guys. The S&P 500 or the SPY, with its regular market cap weight, which, as I just said before, has a more decisive, let's say, weight based on these kind of tech stocks such as Microsoft, Apple, Tesla, Amazon, Google, etc., etc. You know what I'm talking about. So the S&P 500 is up 11.50% year to date. If we exclude the 10 most important tech stocks out of the S&P 500, the S&P 500 would be up year to date 5%. And if we take a look at the S&P 500 with an equal weight, so without the influence that these mega tech stocks have over the S&P 500 market cap wise, the S&P 500 would be up year to date 1.83%, pretty much flat. So as you guys can see, the let's say the most important tech stocks are the ones that are still doing the heavy lifting, and that represents a challenge, a big challenge for the bulls. So can the SPY or the S&P 500 keep going higher without the participation of these kind of stocks? And on top of that, you guys know the NASDAQ 100. Okay, this is pretty much the Qs. So this is an index in which the big technology stocks have an even larger influence on. And the NASDAQ 100, guys, year to date is up, let me take a look at this, 36%. 36% year to date. And keep in mind that the regular performance of the NASDAQ 100 in any given year, the standard performance of this index is at around 12 or 14%. So in just a matter of 5 months, the NASDAQ 100 has more than doubled the average gain that this index obtains during a regular year. So over here we have some sort of an inflection point for the markets, because either the laggers catch up with the winners of the year, or the winners of the very big winners of the year are going to have to catch up with the losers going lower, and that obviously it could be that could be bringing on some downsticks. So this is something that you guys have to keep in mind. I have some requests over here already. I have Qualcomm, ZS, absolutely, SOFA, yeah, absolutely. Okay, guys, what do you think about the SPY? Let me ask you. 430. Is 430 going to happen or not? What do you guys think? In my opinion, guys, I have a pivot that I am keeping a close watch on throughout this week, which is going to be 427.50. 427.50 happens to coincide with an anchored volume weighted with an anchored volume weighted average price that comes from yesterday. So, since I am telling you that this is going to be my pivot, if the SPY tomorrow opens the trading session above 427.50, and if the bulls happen to be able to close candles above that area, first of all, we have today's high, 428.50, and above 428.50, and mostly if we happen to see these kind of melt up operations that we have been seeing recently, I think that 430 is coming up for the bulls. Once 430 is hit, that might be a whole different story. It is a fat number, a very important number. I think that 430 is acting like a magnet. So in my opinion, if tomorrow we can open the trading session, as I just told you guys, above 427.50, I think that 430 is coming up sooner rather than later. On the flip side, the bearish case, let's just put it that way, closing candles below 427.50 opens the door for a test of 426, $426. And mind you guys, if this support of $426 happens to be broken to the downside, I think that the bears are going to be gaining momentum short-term wise, in which case I have an important spot to the downside, an area of interest in which I am expecting the bulls to be able to put on a good fight at $423. This is an anchored volume weighted average price that comes from the beginning of last week. So these are the levels that I am going to be monitoring. All things Reese says nope. Yep, the bear is lonely, says Wish. Yeah, it is lonely, absolutely. So these are the levels of the SPY that I have in mind. So let's see, guys. 427.50 pivot. 428.50 if the bulls can consolidate above this level, and if the bulls start to close candles above 428.50, watch out for the big fat number of 430. There you go. Yeah, we are live, absolutely. Okay, I have some requests over here. SoFi, let me take a look at SoFi. What happened today in the case of SoFi? It went on a tear today, guys. Take a look at this. Up 6% today. Closes the trading session at $7.65. Wow, guys. The push to the upside is a bit extended. SoFi closed the trading session today 23% above this upward sloping 100-day moving average. So I wouldn't chase it over here. I would rather wait for a process of consolidation above $7.20. Keep a close watch on this level, guys. $7.20 is a previous resistance back from early June. So any retest of this area, and if the bulls happen to be able to hold this level as support, then maybe they could be about to gather momentum in order to fill these next two gaps. The first one up to $7.80, an area of resistance in which they failed today actually. And then if they can take out or they can burst above $7.80 on good volume and momentum, we have another gap up to $8.22. This is a previous resistance back from early February. So this support is very important, $7.10. If it happens to be held as support, then we have these two gaps to the upside. RSI on the 4-hour chart at 76 points, a bit higher, nothing crazy. Let me take a look at the relative strength index on a daily chart, 77 points. Yeah, it is a bit overbacked. SoFi is a bit overbacked here, guys, no doubt about it, and a bit far away from home base. You guys know that when I talk about home base, I talk about the 100 DMA, 100-day moving average, and the 200-day moving average, which is sitting as of now at around $5.60. So don't chase it here, in my opinion, and just wait for a tiny pullback down to $7.10. Let me take a look, by the way, at the market structure of SoFi. Let me see right here, SoFi Technologies. So what is supply and demand looking like? Let me see. Wow, take a look at these guys. Buyers are in absolute control of SoFi. So we have a rise in demand that is way above the supply, and the supply is below average. Remember, demand buyers, supply sellers. So I think that this level at around $7.10 is very likely to hold, and therefore, maybe we are about to see $8.20 in the case of SoFi. Credit information, not a problem, of course. Palantir, let's go ahead and take a look at PLTR Palantir. Alrighty, went up today 1.44%, closes the trading session at $15.46. Wow, this is a very similar chart relative to SoFi, guys. It is extended. So Palantir closed the trading session today 70% above its 100-day moving average. Don't chase it here, guys. Maybe if we want to make a bullish case over here, we can expect PLTR to consolidate above this super upward sloping 5-day moving average, so above $15 approximately. In which case, what would be the next gap to the upside? Let me see, guys. What's the next gap over here? There you go. Here it is. $17, guys. If I pull up this 3-year chart. So $17 is a previous support back from May of 2021. Jesus Christ. So Palantir consolidates and holds as support $15. The bulls can gather momentum in order to fill this gap, as I just said, up to $17. So from $15-ish up to $17, this would be a 12% profit trade. And don't be surprised, because we're seeing, despite the fact that the chart shows that Palantir is a bit overextended, we can make the case that we have a lot of good momentum over here. So don't be surprised if Palantir actually closes this gap right away up to $17 in the course of this week. What would be another possible scenario over here, guys? Losing $15 as support. What would be the next support over here? Yeah, if the bulls cannot hold $15 as support, then watch out for a quick visit down to $14, which acted as support on, let me see, guys, on 1, 2, 3, 4, and 5 occasions recently. So $15. I wouldn't chase it here, guys, thinking that Palantir is going to fill this gap up to $17 right away. I would wait for a pullback and consolidation above $15, and if this support happens to be broken to the downside, I would also be looking for support at around $14. So a bit extended, but we can make the case that buyers are in absolute control of Palantir. Let me take a look at the supply and the demand over here. Let me see, Palantir. There you go. So in the case of SoFi, if you guys can recall, we had the supply below average. So we could see, or we just saw the supply below these dotted line that you guys can see over here. So this is the average supply, so sellers. In the case of Palantir, we have an ascendant demand, obviously, because this stock has been going on an absolute tear. The demand is way above supply, above the supply, sorry, but however, the supply is starting to rise little by little. That implies that sellers are starting to step in over here, which is an additional reason in order to avoid chasing Palantir over here, thinking about this gap that could be potentially being filled in the upcoming days up to $17. So there you go. That's my take on Palantir. Very overextended in the short term. So let's see what happens with Palantir. Thank you, sir, for your levels on the SPY. Not a problem. I went over the SPY, but you know that tomorrow I am going to be providing you guys the precise numbers before the trading session opens, and after the trading session opens, I will also be talking you guys through the price action that we are going to see tomorrow. Okay, any other requests over here? I have Qualcomm. Let me take a look at QCOM. What happened today with Qualcomm? It went up today, 3.22%, closed the trading session at $116.36. In the case of Qualcomm, guys, we still have a major downtrend. So I just went over SoFi and Palantir. In those cases, the buyers are in control of those technical charts. That is in the case of Qualcomm. We have a major downtrend, a downward sloping 200-day moving average, and also a downward sloping 100-day moving average. However, since we have an upward sloping 5-DMA or 5-day moving average, we can say that buyers are starting to show up, or that buyers are starting to show some interest for the stock of this company, of this semiconductor company. I would wait for some sort of consolidation above $114. $114 is a previous support back from late April, also a previous support back from mid-March, and this is also a previous support back from late October, and also previous support back from late September of last year. So we can also say that the bulls of Qualcomm are starting to work in some sort of bullish flag pattern over here. Not an academic one, but we can say that they are trying to work out on some sort of bullish flag pattern. Let me try to draw it here, guys. There you go. That is some sort of bull flag. So for the bulls, in order to be able to complete this bull flag, they are going to have to take out, they are going to have to burst above $117. So this would be a possible scenario in the case of Qualcomm. So the bulls burst above $117. We have a gap up to the convergence of these two moving averages that are downward sloping, 100-day moving average and 200-day moving average. Since these moving averages are kind of downward sloping, not in the case of the 1DM. No, yeah, the 100-day moving average is actually flat, but in the case of the 200-day moving average, it is downward sloping. So this is going to be a critical area of resistance, of overhead resistance for the bulls of Qualcomm at around $120. But if this bull flag, guys, happens to play out, say that we get shares or call options of Qualcomm bursting above $117 up to the convergence of these two moving averages at around $120, this would be a 3% profit trade, nothing to sneeze at. Another potential trade over here would be a little retracement down to $113, $113 and 50 cents ish, let's say, which is the previous support that I just told you guys about, in which case, if we happen to confirm support over there, what about a trade from $113 up to the upper line of this improvised bull flag that I just told you guys about at around $113? This would be a 3% profit trade. But be careful, because Qualcomm is still under the control of sellers. It is still in a major downtrend. Let me take a look at the market structure of Qualcomm. What do I have over here? Let me see. QCOM. Alrighty. And take a look, guys. Buyers are starting to show up, definitely. If we reconcile, guys, the market structure of Qualcomm, so demand and supply versus the technical chart, in the case of Qualcomm, I just told you that since we have a rising 5-day moving average, I actually use the 5-day moving average in minor time frames in order to try to figure out when a trend is about to change, either an uptrend or a downtrend. So over here we have a major downtrend with a downward sloping 200-day moving average. However, the fact that we are seeing the 5-day moving average starting to rise is a sign that in minor time frames the buyers are starting to work on some sort of trend change. And I can confirm this case by taking a look at the market structure of Qualcomm. We have a rise in demand that is above the supply. Yeah, the supply is rising and above average, but as of now, buyers are outnumbering sellers. So I am going to keep a close watch on Qualcomm in the upcoming trading sessions. So thank you very much for your request. We have XLF, the financial sector. All right, let me take a look at XLF. This has been a mess. I think that the financial sector is down year to date. Let me see. Year to date, let me see. And yes, it is. Take a look, guys. The financial sector, or XLF, is down 2.91% year to date. So this could be, this sector could be a beneficiary, let's just put it that way, of a quote-unquote new bull market if we actually happen to see a more solid rotation from the winners of this year into the losers of this year. Hold on for a sec, guys. Let me take a sip of water here, or Sprite, or whatever it is. Okay, major downtrend here for the financial sector. It is trading below a downward sloping 100-day moving average, below the 200-day moving average, and take a look at the 5-day moving average, guys. As I just told you in the case of Qualcomm, it is starting to rise. This is a good sign. This is a sign that buyers are starting to show some interest in the financial sector. So we have a big resistance coming up for XLF. Let me draw a line over here at around $33.50. This is a previous resistance back from early May, and this is also a previous resistance back from mid-April that for the most part happens to coincide with the 200 DMA, with the 200-day moving average. So I wouldn't touch XLF below 33.50. However, on the flip side, if the bulls are able to burst above 33.50, we have, let me zoom out over here. If that were the case, we have a gap that could be potentially being filled up to 30, let me see, this would be, yeah, $34.50. So let me see, 33.50 up to $34.50. Yeah, that would be a $1 push to the upside. So from $33.50 up to $34.50, which happens to be a previous support and resistance. We are talking about a 2.50% profit trade. In the case of $34.50, this is a previous support back from early December of last year, and this is also a previous resistance back from late October of last year as well. So the financial sector, or banks, are still guilty until proven innocent, but they are making progress over here. So actually, guys, I wouldn't trade XLF itself, but I would rather trade the big bank stocks such as maybe Goldman or Bank of America or even Wells Fargo if I happen to confirm that the buyers are able to burst above $33.50 in the case of XLF. Jackwell Green Ford. Yeah, absolutely. Let's go ahead and take a look at Ford. Ford Motor Company. It went up today 2.70% and closed the trading session at $12.93. The bulls have been making progress over here. And this area, guys, I think that we went over Ford not a long ago in a live stream that I did, I don't know, like a few weeks ago. And I told you, watch out for $11. This is a previous support that has acted as such on multiple occasions. If the bulls are able to hold $11 as support, Ford could be bouncing back up, and guess what? That's exactly what happened. However, we still have a downward sloping 100-day moving average and also a downward sloping 200-day moving average, so we can still make the case that Ford is not out of the woods quite yet. We don't even have yet a higher high, which would be a sign that the bulls are actually reversing this horrible downtrend in the case of Ford, but we have an upward sloping 5-day moving average, which is a confirmation, technical wise, that buyers are starting to step in. So since this is a major downtrend, I wouldn't touch Ford unless I have a bit more of confirmation that the buyers are outnumbering sellers. by bursting above $13, which happens to be a previous resistance back from early April, also a previous resistance back from early March, and this is also a previous support back from early December of last year. So I would like to see, guys, Ford or F bursting above $13 and the bulls starting to consolidate slightly above $13. That could be a sign that they are thinking about filling the next important gap up to $14, which is a previous resistance back from early February. So if we were able to take this trade the way that I'm telling you guys over here, from $13-ish up to $14, this would be a 6% profit trade, nothing to sneeze at. So the bulls have been making progress over here, guys. Let me take a look at the supply and demand of F or Ford. What do I have over here? Let me see. And here we go. Take a look, guys. Yes, buyers are starting to show some interest. In the case of Ford, we have an ascending demand that is way above the supply. So $13 would be, or a process of consolidation above $13 would be the trade that I would be thinking about. Ford. C3AI. I closed a trade today on C3AI, guys, by the way. Yeah, I closed let's say a little trade. By the way, guys, my advice, do not buy options on C3AI. The implied volatility is simply too high. So if you buy options, you need a big push to either the downside or the upside in order to make money, regardless of put options and call options, or regardless of the fact that you get calls or puts. The implied volatility is simply too high. I have been trading this name since, or this ticker, since a few weeks ago, in and out for the most part. And every single time that I try to take a trade on C3AI, I simply buy shares. All right? Because the implied volatility, it isn't worth it unless you sell options. You guys can sell puts over here, which is a better option relative to buying options, because you're selling the volatility. So you are, let's say, taking advantage of the expensive prices of the options of C3AI. So be mindful of that. It isn't worth it, grabbing either calls or puts in the case of C3AI. It went, the stock of this company went on an absolute tear today, went up 8%, closed the trading session at $38.19. This is a very volatile stock, guys. I actually put it on my watch list today, on my Patreon. So I'm thinking that any retracement down to $35 could be a buy. $35 is a previous resistance back from late March. So you guys can tell that this is a previous area of resistance that now could be acting as or like a new support. So any retracement down to $35, in my opinion, could be a buy. And if we want to be a bit greedy, let me pull up here a 1 hour chart. If you want to be a bit greedy, take a look at this area. I was actually taking a look at this area at around 3 p.m. thinking about a breakout trade over here. $38. So the bulls failed today at $38. Yeah, they closed slightly below $38. And $38 happens to be a previous support back from late May. And also, yeah, back from late May, this is a previous support that acted as such on 2 occasions, as I just said, back in late May. So I have 2 potential scenarios over here. A retracement down to $35. If I happen to confirm support over there, I might be grabbing some shares from $35 up to $38. This would be a 9% profit trade. Or another trade, a bit riskier, mind you, would be seeing the bulls of AI consolidating slightly above $38, in which case we have 2 potential gaps to the upside. The first one, $42, previous resistance back from May 31st, and a second gap even higher up to $47, which is the spot in which the C3AI felt at on its, or the day that this company posted earnings. That was back on May 30th. So these are the scenarios that I am thinking about C3AI, and who knows, guys. I took a look at the earnings report of AI. This is still a non-profitable company. And I think that they are promising a bunch of stuff that they are not going to be able to deliver in the short term. But this is the perfect storm, guys. So this company went public with the two, let's say, magical words, artificial intelligence, in their name. So this was like simply perfect. This is, this is as best as it can get, right? So maybe, who knows, there is more upside over here, but be careful and just avoid trading AI via buying puts or call options, unless you can buy and sell during the day. Yeah, says Gianel. Wow, guys, you guys' names are very tough to be pronounced, huh? Gianel Pibe. Okay, Gianel Pib. I don't know. Yes. So if you buy either calls or puts and the direction of the trade goes in your favor right off the gate, yes, you can make some money. But again, the implied volatility is very high, so you have to be extremely accurate when it comes to the direction of the trade. Otherwise, you're very likely to lose money. Needless to say, in the case of you guys, I know that most of you trade weekly options. It isn't worth it, in my opinion. So that's an advice that I am going to leave on the table for all of you. Okay, Amazon. Let me take a look at amazing Amazon. Okay, it went up today 1%, and it closed the trading session at $126.61. So what is going on over here in the case of Amazon? Take a look, guys. It hit a fresh new 52-week high today, $126.43. This is another chart that is a bit overextended. We still have a downward sloping 200-day moving average. So that kind of makes me doubt a bit about this new uptrend that we are seeing in the case of Amazon. And on the flip side, we can make the case that the 100-day moving average is upward sloping. So let me draw a line over here. I wouldn't chase it here. It closed the trading session at around or at almost $127. I would wait for a retracement down to a former resistance at $124. This is a previous resistance back from early October of last year. This is a previous resistance that now is meant to act like a new support. If the bulls are able to hold $123 as support, then what about a bounce back up, or a bounce to the upside up to $128 approximately, which is the area of resistance in which the bulls fell out today. This would represent a 3% profit trade. A bit overextended, guys. We can see Amazon trading almost 30% above. It's both 200-day moving average and 100-day moving average, so I wouldn't chase it over here. And if it keeps going higher, how high can Amazon go? What would be the next gap over here, guys? $132 would be the next gap to the upside. This is a previous support back from early March of last year, and this is also a previous resistance back from mid-September of last year. So if Amazon keeps going on a tear, and if this gap happens to be filled right away, so from $128, guys, up to 135-ish, this would be a 5% profit trade. Let me take a look at the market structure of AMZN. Let me see over here. Amazon. There you go. So what do we got? And yes, guys, it could keep going higher, huh? Buyers are in absolute control of this technical chart, even though even though we can say that the push to the upside that we have seen in the most recent weeks is a bit overextended, but we have a rise in demand that is way above the supply, and the supply is below average. So if tech keeps going on a tear, watch out for $135. I would rather wait for some sort of retracement down to this area that I just told you guys about, $123.70, $124 approximately. There you go. Tesla, please. It ran up after hours 2.83%. Yeah, it has been going higher. Let me see. Did we get any news? Yeah, 223. Let me see. I don't know. Maybe we got news. 4:15. Mike Pence. No, Chris Christie. No. What is this? This has nothing to do with Tesla. Okay. So, yeah, it is breaking out, guys. Above a downward sloping 200-day moving average. The 100-day moving average is starting to rise little by little. So, is more upside coming up? That could be the case, guys. So, if Tesla happens to consolidate tomorrow, guys, above 221, which is an area of resistance in which Tesla failed at yesterday and last Friday as well, watch out for consolidation here, guys, in which case we have a gap or another gap to the upside up to 237. This could actually be the final destination for the Tesla bulls out there, guys. 237, $237 happens to be a previous resistance back from early November of last year. So if we are able to take this trade, guys, let's see that tomorrow the trading session opens and we happen to see Tesla consolidating slightly above 221, 222. If we happen to start a trade over there from 222 up to $238, wow, guess what, guys? This would represent a 7% profit trade. However, on the flip side, if this previous resistance, guys, at around 221, which is an area in which the bulls failed yesterday and today as well, by the way, until noon at least. So if this support happens to be broken to the downside on good volume, or on good with good volume rather, then we have a gap down to 212. So these would be two possible trades on Tesla. One bullish, consolidating above 120, 121 say, in which case we have a potential gap up to 235 in the cards, or if the support of 220, 221-ish happens to be broken to the downside on good volume, watch out for a drop down to 212 in the case of Tesla. Good old Tesla. Let me take a look, by the way, at the market structure of Tesla, guys, over here. And you guys know that I am improvising here. It is very tough, guys, after having been streaming for 7 hours in a row. And on top of that, you guys know that English is my second language, guys. Obviously, you can notice my accent. So I am making a big effort here. So if you guys notice some mistakes here and there, I apologize for that. So, yeah, take a look, guys. Buyers in control. No doubt about it. Rising demand. The supply is rising and about to burst above average. But forget it, guys. Buyers are in control here. They are outnumbering sellers by a mile. So if this support holds around 121, maybe 235 could be coming up for Tesla. Okay, guys, I'm going to do Shopify. We are, how much? 42 minutes in. Before I wrap it up, I am going to go over Shopify. Okay, Shopify. And guys, once I'm done streaming, you know that I am streaming exclusively for you. Once I'm done streaming, I am going to release this live stream in my YouTube channel. So if you don't mind going or looking for the video in my YouTube channel, and if you don't mind dropping a comment over there and hitting the like button and stuff, but well, that's very helpful for me. That helps me with the YouTube algorithm. So that's a favor that I am going to be asking for today. So I close the stream. Go to my YouTube channel and drop a regular comment in the stream, please. If you don't mind doing that, obviously, okay? All right, Shopify goes up today 6.24%, and it closed the trading session at $63.65. Clear uptrend, upward sloping 200-day moving average, upward sloping 100-day moving average. The bulls seem to be consolidating above this 5-day moving average, which happens to be flat, which is nothing to be really worried about because we're talking about a major uptrend. We have a big overhead resistance here coming up for the bulls of Shopify at around $65. Shop went up today 6.24%, and it closed the trading session at $63.66. So in my case, again, I would wait for some sort of drop, some sort of retracement down to this previous resistance, or this would be. Oh, let me zoom in here, guys. Let me see. Yeah, this is a previous resistance, guys, at around $60. So Chop failed at this area on June 2nd, and the bulls also failed on May 31st. Previous resistance that now might be acting as a new support, and on top of that, this area, this level happens to coincide with the 5-day moving average. So a retracement down to $60. I think that would be a viable dip. And what about a breakout trade over here? Can the bulls of Shopify take out or burst above $65 and keep going higher? Yeah, why not? That could be the case. Let me see. So Shopify, or if the bulls of Shopify can burst above $65, we have another gap up to $76, guys. Jesus Christ. $76 is a previous resistance back from mid-March of last year. This could also be a possibility, but for me, in order to take that trade, I would have to see the bulls of Chop consolidating above $65. This could be a breakout trade, a perfectly legit breakout trade, or maybe a drop down to $60. Let me take a look at the supply and demand of Shopify. What do I have here, guys? Let me see. Chop. Alrighty. So, take a look, guys. We have a decrease in demand that is below the supply, and the supply is starting to rise. This makes me believe that the likelihood for the bulls of Shopify to be rejected at around $65.50 or $65 is very high. So we are about to see some sort, according to what the market structure of Shopify reflects, according to the demand and supply, we might be able to see some sort of profit taking over here. So I wouldn't be counting on this breakout trade from $65-ish. I would rather wait for a retracement down to $60, and then maybe we could be seeing Shopify bouncing back up. Okay, guys, I am going to wrap it up here. Thank you very much for joining me today. 47 minutes. And enjoy the rest of your day. I need to take some rest. I'm exhausted. So thank you very much. And I will see you guys on Discord. Okay. Good luck. And manage your risk accordingly, please. Okay. Take care, guys. And see you on our Discord chat. Bye. Bye. Take care. Thank you very much for showing up. Bye, guys. Thank you.